Hey, it's Mike with PriceActionTradingSystem.com. It is Monday. It's September the 11th. This will be our chart lesson for the day, and really strong trend day today. Before I get into that, I just want to say real quickly, I've had several emails over the last few days, or I shouldn't say last few days, but the last few trading days, because a couple of them went into last week, where people were, saying my data looked different, my data didn't look like theirs. And looking at several of the charts, it didn't look right. It wasn't the the chart today really looked different, and is what made me finally decide, hey, I need to look into this. A couple of the ones I got last week, they were slightly different, but it wasn't really enough to make a big difference. But somebody sent me their chart this morning about 8:30, and I'd already kind of questioned my chart because it just didn't look right. And this trader sent me his chart, and when I saw his, I knew that instantly that something just wasn't right. Um, my December contract just didn't look right, and so it took me a little while to figure it out. It turns out that I had some kind of corruption. It was not in my database, but it was in my I'm trying to remember what you call it. Uh, in my instruments. For some reason, my instrument, they were corrupted somehow, and you can reset that. And so I finally reset that, and that corrected the problem. It almost looked like I was still loading for December. It really looked like I was still loading the September contract because I opened my September contract and they looked exactly alike. I was questioning, well, maybe the volume hadn't switched over yet, which usually by the second or third day, everybody switched over. And so I'm thinking, well, maybe for some reason they're still trading the September contract. So I opened that up just to see how it compared, and they looked exactly the same. So I believe that my chart was loading the September contract, even though it said December. So needless to say, I got that fixed. I believe the data looks good now. I've compared it to several other charts, and it appears that I'm back in business. So um, hopefully that fixes that. Anyway, I thought I would just run that past you for those of you that have kind of questioned why your data was looking, completely different than mine, and I believe was the problem. Somehow my um, contracts were not loading properly. So anyway, let's talk about the chart lesson. A really strong trend today. It gapped up and really never noticed that we had to close outside, two legs up, and then we just on a strong market day, this is kind of what you see. This was the correction. Instead of selling off, it just went sideways. Nobody wanted to sell it, but really the buying kind of dries up. So, and you don't want to be looking for a short at any point on a day like this. Just don't look for a short. Not unless you get a confirmed trend working in the other way. And when I say a confirmed trend, you need 3 touches going the other way. You need to see a reversal pattern, the whole 9 yards, and you don't see that today. We had the close outside, 2 legs up to a new high, and then we just went sideways. And so you didn't really want to go long, but there weren't any really good shorts. If you'd have taken one of this lower high here with this it would have worked. But you're better off just do not try to take any shorts, not until you get a confirmed trend in the other way. And all we got is confirmed sideways, and there's just really nothing in here that interests me in trying to get along. And I'm definitely not going to take a short on this day. So not a lot of trades today, but you didn't need but 1 or 2 because every one of them you would have had a runner. And the ones that are here are pretty straightforward. But let's just talk about them, and it won't take long. We'll wrap the day up. But the first one came here. We had a little bit of we were going sideways. You got 1 leg up. You're going sideways. You get a little failed breakout higher. Technically, you could have gone short here. A good bit away from the EMA. I didn't like it. I really thought we would. It looked like it was going to be a spiking channel. And when I was looking at this earlier, my data didn't look right, so there was no setup there at all. But even looking at this chart, you might have taken that trade. And it does fit our criteria, so I'll mark that one short. But because you really don't see that it's going to be a strong trend yet until you really start working higher here. So you could justify that short, and I'll change it and move it over there. It looks like it's only 3 or 4 ticks too, so it's a small risk entry. And notice what's happened, what you got here. Let me put the line. You're just working sideways. You get a failed breakout, and then you get a double top. So yeah, and you're a good bit away from the EMA. You got room to really get out before you come back to the EMAR. Only problem is if there was a trend line here, you know it's pretty close there. But I do believe you got room to get out before you came back and tested this breakout area here. So I'll mark that one. But the better trade is when it fails out the bottom. And notice what happens is you made this pullback here and you tested it once, twice, and you get a little failed break lower. Nice bullish bar right off the EMA. If you copy that line and pull it down to here, it's right off the trend line and the EMA, so you got some confluence there. That's a nice entry. You want to take that one most every time, and off it goes. And notice what happens. It's moving up. You don't even get your first break below a bar till here, and then you're kind of going sideways. Then you make a little double bottom. So that's a fail, and it actually goes lower here below that real bearish bar, and then turns and goes out the other side. I like going long there. That's a failed second entry short if you're counting off the new low here, and you haven't gotten back up to the upper trend line yet, and it's right off the EMA as well. And look, it goes straight up and it keeps going up, but notice how it never gets back up there, then it works back down to the other side. So on my original chart, this just looked totally different. So you just have to skip that because my data was just wrong. So if you looked at my mid-morning chart and you changed all your stuff because of mine, I apologize, but my data just was not right. And I probably should have left it open and could have showed you what I was looking at, but there wasn't much there, to be honest with you. But anyway, failed second entry short there. And then that's a double bottom, so, and it's off the EMA. I'd count that as a new low, then a first entry short, second entry short. So another failed second entry short. The only reason this one's not blue is it's not back to the EMA. It's not back to the midline. We just came off the high. So there's a good chance you might get trapped there and then it turned down. But it does meet our criteria. It's a failed second entry short. This looks like a strong trend at this point. So if you went long there, I'm okay with it. Then we start working sideways. We can't notice how we can't get back up there to that upper trend channel. And we're just going sideways. You get a lower high, but like I said there, it's a double top. You don't want to go, I mean, that's just a little congestion. You actually get a little failed break lower here, but notice how you push through the EMA or the midline. You're not back to the EMA. So just sit tight. And then, of course, you draw that trend line off those first two swings, and it's fitting perfect off the bottom as prices work down. And notice what happens. You get a second entry long here. The only reason this one's not blue, and you could argue for this to be blue, it's real close, but you got this trend line and you don't have a close outside or attempt to go lower or anything. So, but it is a second entry long right at the key entry point. We did go below the EMA, so that's a little bit of a concern too. So I only mark that one green. I think you're better off to wait and look for your failed second entry short or some other kind of setup, and notice what happens. We just start going sideways, and you try to go lower once, then you try to go lower twice, and you get a nice little bar right there, closes back above the EMA. I like going long there. And it's off to the races again. So you would have had a runner here, or here. You'd even had one here because you would have had to ride this sideways stuff out. And then notice this is a double. You could basically count that as a double bottom. So that could be a first entry, second entry. So there's your failed second entry short. It goes lower first and then turns and goes out the upper side. You figure you'll probably get another leg up to a new high. And if you measure this one, really you should probably measure from there first. And so you're looking for a measured, and we got basically a perfect measured move. And then it just goes sideways. And you really don't get a chance to enter in here. You get a little failed break lower here, but this late in the day, I don't think I would have taken this. If you did take it, you probably would have gotten stopped out if you tried to ride this out. But as it starts going sideways again, and this just moves down a notch, you can see how that just kind of, everything just kind of, it just really dropped down. It's really two tiers is what it is. And it just dropped down a tier. And so you don't want to be going long into that. And you don't have much room there. And then here again, of course, that's after 2 o'clock, but you just really don't get a chance to enter there. And it just keeps going sideways. So I don't see any entries there that late in the day that would interest me. So I think you're better off just to skip that. So not but 3 or 4 trades today, maybe 5, 6 if you count the green ones for sure. But this is, and somebody actually sent me an email and said that, hey, I sat there and watched it all day. You know, how do you find the entry on a day like this? And I'll just be honest with you, you're not going to find very many perfect textbook entries. You just notice how there's really no corrections at all until here. You get a little bit of a correction. That's not much. It's just 2 legs down. But you just don't get any huge corrections. Nowhere on there. You got one early on. You got one here. And that's generally the midpoint when you get a 2-legged correction in there. And so we could have continued to go higher. So you don't really want to short anything here. Yeah, the only way you're going to get an entry on a day like this is you just have to about take any correction. And if you get a correction to any key entry point, such as a trend line, EMA, failed second entry short, just a second entry long, that kind of thing, if you get those, you probably got to take them on a day like this. Because if you don't, you're not going to find an entry. And reason being is that people are looking to buy every little correction or any pullback. They're just looking for a chance to get in. And you have to recognize this. And the way you recognize this, it didn't really look like it till once we started up through here. But when you see all these little bitty bars, lots of doji looking, and they just keep going higher and higher, and they're all little bitty bars, that's a sure sign. Everything's above the EMA, really. That's a sure sign that you got a strong trend. And you'll see these trends just like this going in the other direction. And you just have to be able to recognize those, the type day it is. And really the way you do that is by noticing that everything's above the EMA, all the little bars, lots of little dojis, and it's just very small pullbacks. And experience helps with this. Once you've looked at it for 10 years and you're used to what you see, and the same thing when you're going sideways. If you look like you're going to be in a trading range and suddenly you start trending here, you got to switch gears. I mean, this looks like it was going to be a range day, and then we really trended up for, it was a range day in the end, but we trended up for, half the day, and then we trended down for half the day. So just trying to look at one this is a good example here where it looks like we actually do have a downward to sideways action. And the way you know that it's sideways is notice how we're below the EMA, above it, below it, above it, below it, above it. And then suddenly it turns into a nice uptrend. And you got to be able to recognize that it's changed and switch gears. And that's where people really struggle, because they finally understand that it's going down. And all that is, if you can't see that yet, you're just not really experienced at reading the price action yet. You're learning to spot a trend, or you're learning to spot sideways, but you're not yet recognizing when it's changed. And you need to get to that point. And so study those kind of charts and study the changes. And I think that will help you. But anyway, that pretty much wraps it up for today. Again, hopefully I got my data problem fixed and no more issues with that. So it was a little disheartening when you think you got data problems, especially if you, um, luckily it didn't seem to affect my trading. Maybe I didn't see as many trades or get as many trades out of it. But if it starts affecting your trading, that's when it's really, can mess with your mind. So um, I feel pretty comfortable after today that we've got this straightened out. So I'll continue to watch it pretty closely though for starting tomorrow morning just to be sure. Because you don't. One thing you don't want to do is be trading with the wrong data. And nothing. One thing I try to tell people, people contact me and they say, "Well, I can't afford to get good data right now. I'm trying to use." Definitely don't try to trade off of um, interactive brokers. I know they have great rates. The problem with them is their margins are out of this. They're out of sight. You don't want to. You don't want to have to put up $3,000 to make a day trade. Um, if you're only trading one contract, you don't even need that much money in your account because all it'll do is give you a chance to lose it. So, um, don't try to use their data, especially for tick charts. And there's just some data that they don't provide very good tick data. And if you're not getting good tick data, you don't want to be trading um, with that data. I mean, if you want to be a professional trader, you need professional tools. I mean, it'd be like going into a battle, a gunfight, and you carrying a knife. You're at a disadvantage instantly, and you're not going to last very long. And it's the same thing if you try to skimp on your trading tools. If you want to trade the ES or any futures market, really, for that matter, um, you need the right tools. So, I encourage you, don't skimp on stuff like that. And if you can't afford it, then you're not ready to trade yet because you're not going to come in here with limited funds and be successful and be able to do this. Just trust me on that. I've been doing this a long time and I've watched so many people come and go. And I've never seen anybody come in here with a couple $1,000s and use IB's data and be successful. It just doesn't happen, and it's not going to happen. It's like I said, it's like going to a gun battle and carrying a knife, or really carrying a baseball bat. How long do you think you're going to last? You might get a few whacks in, but somebody's going to pull a gun and shoot you, and that's what's going to happen to you if you try to trade the futures markets with poor tools. And so have a good charting service, have a good data, and you don't have to use NinjaTrader. You don't have to use CQG. There's a lot of good. I've tried all the major data um, providers, and I can't tell any difference between. I used Trading Technologies for years, and then CQG I moved over to them because I got a little better rate, and I couldn't tell any difference. I'd compare the charts at the end of the day, and I couldn't tell any difference. I didn't notice anything. So they're both good. I tried the what's the other one that AMP offers? I tried the Rhythmic, I believe it is. Um, I didn't see any problems with it. Um, I've used some others over the years. I can't remember. Um, but any of the major ones, they're all similar. They all get their data from the same place. As long as they're a good company and they're providing it directly from the CME and they're not filtering their ticks, then you're probably going to be fine. But don't go try to get free data from interactive brokers and think you're going to chart that on a tick chart and trade it, because you're going to fail miserably, because it's terrible data, and they filter the ticks and all kind of stuff. So, but anyway, that's enough for today. Make sure the bottom line is make sure you're using the right tools. Don't skimp on your tools. Don't try to trade underfunded. One more thing, just let me clarify that. You read these stories about needing 10 or 15 or $20,000 to trade futures. You don't need that kind of money to day trade futures. Trust me, don't ever put that kind of money in an account to day trade futures. If you're trading and carrying trades overnight, yeah, you probably need that kind of money, because look at this gap up. If you were short, if you were short yesterday and carried this into the overnight, look at the kind of money you'd have to ride this, just to ride that gap out. I mean, it gapped up. It closed at 24.61 and it opened at 24, basically 24.67. So there's 7 points that you would have just gapped up and then instantly started going against you. Well, that's why they make you carry that kind of money overnight, because it's not, I mean, there's been craziness where the market might gap 20 points. And if that happened, it wipes you out. Not only does it take everything in your account, you may not have enough to cover it, and you got to come in and put some more. But when you're day trading, you don't see any gaps in here. And as long as you got your stop in place, if the market goes against you, you're going to get stopped out. And so you don't, it doesn't require all those big numbers in your account. And you just need enough to cover your margin 4 or 5 times. That's my, and if you get really good, you probably only need enough to cover 2 or 3 times. Don't, other than, whatever you think, whatever it turns out you do need, don't keep 1 dime more in account, because you hear these stories about brokers going bankrupt and getting in trouble and people losing their money. So don't store your money there. You just put just enough money to be able to trade and have margin. Figure out whatever you need for margin and maybe put enough for 2 or 3 more trades, just so you got, in case you hit a little losing spell, you're good to go. And if you lose that, you can always add more. And if you make a little extra money, take some of it out, because you don't want to risk, something crazy happening. And that way you don't have to worry about solvency and those kind of things with your brokers, or some kind of financial disaster wiping you out. But if you trade with stops and you're a day trader, you don't need those big accounts. That's the bottom line. So, and I encourage you not to ever even consider those big accounts. You just don't need them. Nothing good can come from them. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.